Hello, everyone. A warm good afternoon to all of you who have joined us today. I would like to thank each one of you for joining us this afternoon for a technical session titled Tracking Last Mile Delivery, How Financial Services Are Delivered at the Last Mile. It is my pleasure to invite the esteemed panel for the session. The session shall be moderated by Mr. Prabhat Labh, CEO Grameen Foundation India, and the panelists include Mr. Anand Bajaj, CEO Pay Nearby, Ms. Shweta Apramaya, CEO Earth Impact Digital Loans, Ms. Sunanda Sharma, Lead Financial and Digital Inclusion, AU Bank, and Mr. Dev Shankar Mukhopadhyay, Chief Strategy Officer, FIA Global. We look forward to a very insightful discussion. And with this, I hand over the charge to you, Prabhat. Over to you, Prabhat.
Thank you, Priyank. Good afternoon and a very warm welcome to all of you. It's really humbling to moderate this session with such a distinguished and experienced set of panelists, in which I look forward to learn a lot. The topic of tracking last mile delivery of financial services, how financial services are delivered at the last mile. That's something that we all are passionate about, and we have been working about and thinking about and doing something about in our own respective domains. In fact, we live in this COVID pandemic scenario for last 18 months. And if we have seen how in the pandemic scenario, in the lockdown, like 19,000 crores were pushed out to 20 crore women account holders holding PMJDY accounts, almost like at the push of a button, or like almost 76,000 crores being sent out to over 12.5 million, so 12 crore farmers, 1.2 crore farmers, under the PM Kisan Samman Yojana, again seamlessly. So it seems unbelievable. 10 years ago we couldn't have imagined that financial services, at least on the payment side, could reach the remotest hinterland, people and in different parts of the country so seamlessly. Today, we are in a country where every month we are setting new records with regard to the number of digital transactions happening over UPI or APS and others. We are a country where, now we have between 1.2 to 1.9 million business correspondents serving, remote corners of the country, and really taking, financial services to the last mile. Yet we all acknowledge that while a lot of progress has been made, a lot of innovative models have come up. We have a really robust digital ecosystem in place, which is being leveraged by a variety of players to deliver a wide range of financial services. There is still a lot of ground to cover, right? Over 430 million PMJDY accounts have been opened, but people talk about, okay, how many of these are functional? And, there are different estimates which say that, okay, 35% of the accounts may not be operated regularly. And they get operated only when the DBT transfers, made their way to these accounts. But I was just looking at the data around DBT itself, like last financial year, 389,000 crores, so 3.89 lakh crores was sent as DBT to various bank accounts out of hundreds of different government schemes. So that's like unbelievable, in terms of numbers, and staggering. So we are really interesting crossroads. A lot of progress has been made, but a lot more ground to cover. And who else to kind of respond as to how do we cover that ground than our esteemed panel? So, but before we actually go to the panel, my request to Priyank is if we can run the first, audience question to, see the audience engagement about what they think about this issue about over the next 10 years, which of the channels will define financial services delivery at the last mile? Can you show the poll, Priyank, on the screen for the audience?
Sure, sir. We are doing that.
Thank you.
So we have already shown the poll. You'll get the result in 1 minute in the personal chat.
Okay, great. Yeah, so the options, for this question are that it will be defined, option A, digital transactions self-initiated. Option B is digital transaction in an assisted mode by a business correspondent. And option C is offline transaction at banking outlets, like the way we used to do banking traditionally many years ago, or maybe a few years ago. So let's see, what our audience has to say. And while we wait for the audience poll results to come in, I would also like to kind of get going with my first set of questions to my esteemed set of panelists. So the first is for adoption of financial services, what is the most critical factor that helps in building customer trust and drive adoption of financial services at the last mile? And I would like you to reflect upon how your organization is working towards building this trust and driving adoption. And for this first question, I would like to invite Mr. Anand Bajaj, Paynearby, and followed by Shweta from Earth Impact Digital Loans. If you can comment on this question one by one, and after that, of course, Sananda, you and Mr. Dev Shankar, if you would also have some additional comments to make, you can please comment that on that. And would you like to wait for the audience poll results to come in, or you want to start, Mr. Bajaj?
Let that come in, but anyways, it is irrelevant. I will tell you why. Because we are asking a question to digital savvy segment for how the lives of the digital deprived would be handled. And
okay, actually, the results have come in. I can see it on my chat box. Please. There's 57% response to the first option, that is digital self-initiated. 42.86% was the second option, that is digital in an assisted mode, and 0% to the offline transaction at banking outlets. So you have some cues to build upon your answer.
Yeah, wonderful. And like I said, that while 3.5 trillion INR, as you spoke of, has been dispensed, 1.46 trillion INR remains unwithdrawn in these accounts, Prabhatji. Yeah, we are talking of Bharat and India. We are asking questions to India about the Bharat's relevance. But important that we dispense sachet of trusts to our citizens at Paynearby, how we are configured with 650,000 retail partners, processing 6,000 crore of the funds that you said every month. We serve a customer with 700 rupees, which is his monthly grocery cost versus your cab fare to the conference hall today or dinner tonight. These customers that we serve, Prabhatji, don't tweet to the finance minister, they talk to the Lord Almighty. So in this context, when you are serving, your first point of contact to the citizen is your 6.5 lakh digital Pradhan partners. So in the sequence of priorities that you asked, that if we have to reach 15 crore citizens that we serve, the topmost priority is the right partner selection and onboarding. How do you onboard that retail partner? How do you then train and prepare and skill them to be able to offer services? Since you have asked, reflecting upon how Paynearby does it, we have built the app in 12 languages. We have built video training modules in so many multi-languages so that people are able to avail easy access. So with the right partner selection, the right training and skilling given, technology comes next to next. What comes next is a simple to use user interface, where I don't have to teach him everything. He's able to intuitively, like they say, grandma friendly or kid friendly. The user experience is more important, which sits on top of the robust backend, which anyways has to be military grade, high availability, high precision. We are glad to say that we have an ISO certified, PCI DSS certified platform, and we have changed 9 interfaces with the help of the field, which keeps coming in regularly. After the technology backbone, automation is prime essential, because if you have woken up to go and rebank Bharat, you will not be able to build a similar large call center and customer care team unless you have automated the hell. So we have 1200 line SIP trunk, where a user can call up from the app itself and gets response for a particular transaction with the status and what is the next that will happen with him. That said, automation is automation. There is a 120 member contact care number where people can call almost like 16 hours in the day, minus the late night and the early morning shifts. With contact center, there is at the end the desired product. So product is not the first thing. The partner selection, the right training, the right user interface, the right tech backbone, the automation, the customer care, and then the desired product. It is our responsibility to choose the right product and from the right partner. I cannot give him a plethora of 2,000 services and then expect them to get confused. We'll talk about it later in the time, but when you asked about how have we configured it, that the desired product comes from desired partners. And hence 52 NBFC microfinance institutes have been configured, 9 banks are configured, the 3 key processors are serving along with us, 3 payment gateway partners are serving with us, 7 insurance companies have been configured on the platform to cover the entire gamut of services to people, 2 large FMCGs and 4 e-coms players. So product and then the partner of supply side comes last. Who is the audience is first, what we will bring is last. That is how we have gone about rebanking India, if I may submit.
Thanks, Anandji. I think very helpful and comprehensive way to address. I will come back to you, subsequently with a follow up on what you raised, and that follow up, will be if you can reflect about, PayNearby, let's say, working as a business correspondent, as a facilitator of financial services, and you bringing in a range of products from range of partners, and there are many things which are not under your control, right? Like product attributes, or even the product support. Once you have onboarded the customer, a lot depends on who your partner is and how they are servicing that customer. So in that sense, the customer is seeing you, but actually interacting with somebody else at the back end, which the customer is not seeing. So I think, subsequently when you come back, if you can also reflect upon that, that tricky situation that puts you in, that'll be helpful. Can we, come to you, Shweta ji, for your inputs on this question?
So good afternoon, panelists and all participants, and thank you so much, Prabhat. I think you've given a very good starting point for us to really start thinking through the biggest problem, which is around trust at last mile. And I think the way we at Arth look at this challenge of building trust at the last mile is really thinking about it as an accessible present model. And when I say that, it becomes more relevant now, because the same question we would be asking 10 years, 15 years back, because trust is something which is associated with financial services forever. And this is the most important value that gets tagged as far as financial services is concerned. But it's even more relevant because now we think about financial services in the context of being digital and virtual, and our journeys transforming from not being present and being slightly more faceless in that manner. So we have been sort of rethinking this whole accessible present model in a slightly more old age thought process. And if I can maybe put it in a more specific context. So when we started building credit as a product that we want to offer to nano and micro enterprises, we were really questioning ourselves on some basic fundamentals to say that do we really understand the need of the nano or the micro enterprise as far as working capital needs are concerned? How do they do the purchase? Where are they buying from? How do we establish that need? And what is the assessment there? So I think if you start with the first question of need assessment and you take that question in their own language, it starts building the believability and authenticity to the customer who you're trying to target. So a good example would be when we started 2 years back, we worked with women groups, we worked with small retailers, merchants, registered vendors, and we started asking them whether we were understanding their needs better. And I think when you start doing it, you start building the first level of the trust point, as we call it. The second is taking the same need assessment and then making it more visible and present. So that's when the whole aspect of starting using communication mediums to start taking the same thing, that have we understood your need well? Is this what you're trying to ask as far as credit is concerned? When you say flexible credit, what do you mean by flexible credit? What is the meaning of affordable credit? Is it 2% per month, high or less? Is it 3%? Is it 1.5? What does it really mean? So start taking the need assessment slightly more deeper with customer, and it is sort of a more patient exercise. And that's what we have been trying to do. And then taking that same visibility and communication slightly further deeper to start showcasing some early wins, saying that, okay, we understood your need, and this is what we understood, this is what we are trying to make visible, and use different communication mediums to talk about it. And here are some early wins, here are some early champions who are testing this and sort of using this. That's when the customer starts building trust with you as far as financial services is concerned, because you want to own that customer. And the first point of validation, Prabhat, really is when customer starts talking about it and they start validating it through their own network of trust, as they call it, right? Communities like family members, influencers, the local guys. And the moment you start reaching that level, that's where you know that your product is actually going deeper and there is a certain level of product trust which is getting built with the customer. And really, that is the point where the whole experience of your product starts. Because before that, every conversation about how is your UI and UX design really doesn't matter. And that's the point where customer sort of experiences and wants to onboard and start consuming your product for the first time. And that's where the journey aspect starts, that how well is your journey designed, whether it is about when the customer gave you the information, how did you consume the KYC, how did you do the video tele verification, how did you underwrite them digitally and give them the sort of the credit on the fly, and then set up the repayment process on the fly. Those are questions that come really at that stage, which is trust point 4 and trust point 5. And that's the point where the customer is expecting almost like a post-sale experience. And if you ask me, this is where most financial services fail, because we are very good in selling, but we are not very good in servicing. And I think that's where Earth is working on really building a model, which is a post-sale model. So even if you've given credit, how do you ensure that you're reaching out to the customer in an engaged manner to say that, okay, how was your loan utilization? Are you really working and building towards your business? We have things like happiness officers, wealth officers, as we call them. They're part of our customer engagement team. And that's where customer starts understanding that, okay, there is a certain company, there's an organization that's really engaging me, that understands my need, has given me an experience, and is there for me. It's not like a faceless entity. That's when you start building advocates. That is your last point, where you start saying, I have advocates now who can talk about my product. So really, this is a 7-step process, as we internally call it Earth, as the customer engagement process, which really defines the trust building model that we are adopting as far as taking credit deeper and credit to the last mile to nano and micro enterprises.
Thank you, Shweta. Very, very helpful, pointers, especially, I really appreciated, your emphasis on first trying to understand, who are my different customer segments, and then, trying to, find their needs and, about how do you build solutions for them. I was just wondering, if Devshankar or, Sunanda, you would have some additional inputs on this question about building trust, because that does come as one of the most significant barriers that customers face in adoption of various services.
Yep. So I think it has been articulated very well. But there is one point that I'd like to highlight, which is about consent. And informed consent is an important part of any financial services transaction that we do today. But it needs to be handled very, very carefully, especially in the online world, for the customer or the consumer to feel confident in using it. However, we all know that there are many deficiencies with the consent and the notice model, especially in the digital financial services, and especially with the adoption of the new technologies and constrained users. That is, basically, we are talking about users with limited general digital financial literacy and probably the first-time smartphone users. These are some of the deficiencies that we'll have to address, urgently to build trust.
Thanks, Devshankar. Very, very, valid, input there. Sunanda, anything to add from your end?
Yes. Hello and good afternoon, everybody. Thank you so much for having AU Bank on this panel. And I think it was really wonderful to hear all the panelists speak about trust. I mean, representing a small finance back in the panel, I think I'd like to say that for a bank, half the battle on trust is won by being a bank. However, there are 6 things that we sort of keep in mind when we talk about trust internally. And, that is 1, availability for our customers. Then we talk about consistency in our services, the speed at which they're delivered, then the next is security, the one I think they also mentioned. Then it's flexibility and convenience. So, these are the 6 points that we are sort of trying to define trust in the new age of, banking and digital banking. So that would be, I think my input on this question. Thank you.
Thank you, Sunandaji.
I quite like the customer happiness officer what Shweta called out. Kudos.
Thanks, Amit.
Yes, absolutely. Yeah. In fact, long ago, somebody was telling me that, why, if you look at the headquarters of any large insurance company, and they were talking about, of course, the global, examples of global insurance companies like, AIG and, MetLife and others, they would always find that, they have huge buildings, and very visible with, MetLife or AIG, etc. written. And, perhaps there's some case study which shows that, insurance is a business, for example, which runs on trust. And one of the ways of building trust was to have a huge building with, huge name, shown there, so that people, know that, okay, this is a sound, solid organization because, the building represents that sound, solid, whatever. And that's why the insurance companies always would have that. But now, we live in a very different world where, the customer is not even seeing, who that provider is. Like, Anandji, when your customers interact with you, they don't see who is the, insurance provider or your NBFC partner or whoever else. So that, dichotomy between, trust and, there are many things which can break trust, but you don't have control over all of that. So that was the question I had posed to you.
Yeah, so it's not really a deficit of trust. Look, today, the government of India has given 20,000 crore in the bank accounts every month. These retail partners are the ones who have given it in the hand. So the trust has been augmented. I'm not saying added. They already are trustworthy. You have, and I have been living off them since our childhood, buying our grocery from them. So they are trusted set of people. You have to identify the right guys who are trainable, coachable, and willing to offer these additional services. They also gain out of it. So it's not about breach of trust, rather it is augmenting trust. And you're right in saying, Prabhatji, that people do not know which bank, which provider. They may not even know Pay Nearby. They know Gupta General Store से मैंने पैसा गांव भेजा. उसको पता है शर्मा जी की दुकान से मुझे 2000 रुपए DBT के मिलेंगे. That is how it works on the ground. The trust is sachetized. Banker trust repackaged by a trusted retail partner who's offering a banking agent services. And who better than AU can talk when they have started building their own network as well to harness this whole model. It is a very meaningful trust mode on the ground. Yeah.
Absolutely. Thanks. We do have one question that has come from audience. I can see in the chat, but I'll go to that question later. But right now we will actually have a question for the audience, which will take us to our next segment. So Priyank, if you can, pull up the next question for the audience poll, which is about what is the most important attribute that the last mile customers look for when choosing a product or a service provider? And options for that question are pricing and cost, cashbacks, product attributes and features, brand or reputation of the product or service provider, comfort with and trust of the person who is serving the customer, and convenience in access, ease of understanding, and simple documentation. So I'll really appreciate if audience can, give, your inputs on this poll, because from a provider perspective, I think, each of these are important, but, perhaps what is more important, at least in terms of audience opinion, let's see that. And while we wait for the poll results to come in, we live in a vast country, right? We are called a subcontinent, 3.2 million square, 600,000 villages, and, beyond forests and, hills and rivers and whatever. And the last mile distribution is really, the most complex challenge for any customer facing organization, right? This is where, your target customer actually sees and feels and interacts with whatever you have to offer, right? But there's also where, you have to make sure that things go right. The customer gets the right messages, right information, right? Quality control, risk management. At the same time, you also need to pay attention to how do you control costs, right? So, how do you really kind of, and these businesses are very, very small, thin margin, high volume, thin margin businesses, which may not be leaving you with enough margin to really invest in building and capacitating that, robust channel, which delivers a compelling, customer value proposition. So it'll be really helpful if Sunanda ji and Deb Shankar da, you can talk about, how do you manage between these, competing priorities of compelling customer value proposition through a robust distribution channel and yet keeping the costs under control. And we do have the poll results, delivered. I'll just share that with you. So pricing and cost 10%, product attribute features 0%, brand reputational product service provider 10%, comfort with and trust of the person who is serving the customer 20%, convenience in access, use of understanding, simple documentation, etc. 50%. Anandji, this is for you. Cashback 10%.
No one will admit. You throw it out and you see what happens. Yeah.
So convenience and access, ease of understanding, simple documentation is winning hands down, 50%. How are you kind of, going to react to, this, poll? And also, of course, the question that I asked, Sunanda ji, if you can go first and then followed by Deb Shankar.
Sure. So I think as a bank, we play the role of an efficient intermediary between savers and borrowers. We garner deposits from the rural areas and deploy them there only. In fact, we go a step ahead and deploy the deposits raised from the urban areas to fulfill the dreams of the rural markets. And as we like to call it at AU, it's a formal Robin Hood model. So with successful distribution methods, digital innovation, and data backing, we are effectively managing our risk and cost while providing a delightful customer experience. So, I think I'm going to take the help of 4 Ds to then probably, elaborate a little further. So the first one is delight, customer delight. For the past 25 years, as an erstwhile NBFC and now as a bank, we have always worked on first principle thinking. We have challenged the status quo and, to bring home delight to our customers. And this delight was possible through innovation that addressed the, pain points on the ground. So we started with a monthly interest payout for savings account customers. We started with, a no deposit or cash withdrawal slip for cash transactions. We believe that all branches should, treat the customers in a manner that a home branch would do. So, there are no home branch concept. In fact, and as an SFB, we were also the first in industry to start something as a video banking or lending based on QR codes. So we have a touch and feel model of operations, and to serve the underserved, we reach them. And just not know them through documents. We believe that the relationship of warmth, along with excellent delivery of service, are the most important product of the bank. Now, if I come to distribution, depending on our customer preference, we offer them 4 channels to transact through branches. The physical branches, the physical mode, the digital mode, through our super app 0101, I think, which you can all see just behind me. the physical model, which is a mix of both, and an alternate channel of BOBCs. So we use the banking platform to create livelihood for the locals while providing amiable environment for the customers to start banking. Last mile delivery, especially to the remote location, requires additional handholding. And to cater to this, we find these excellent resources in the same location who are ambitious and willing to take up promising positions. That is how we are contributing our bit in reversing migrations. Like Anandji said, we even handpicked our own BOBCs and prepare them with robust capacity building training. They are linked to the nearest bank branch, and this integrated model has helped us take financial services to the unbanked. Coming to the amicable environment that we create for our customers, I think we're very grateful to RBI's recommendation in conducting monthly financial literacy camps. In fact, we've taken a very unique approach to hold these camps, especially in the rural markets. So it's a method through infotainment. So I think Nukkad Nataks in the rural language is what we use to highlight the importance of formal banking channel and give them ways to reach us. We also have a team of digital literacy counselors, and their primary responsibility is to sort of onboard customers on digital platforms. And they provide them with concept and process literacy. The third D after delight and distribution is digital. So we've been serving the underserved customer segment for the last 25 years, and we're going to be here for 25 or more. We hope so. And I think digital will make this journey faster. All our customers' entry gates are digital. If a customer walks into a branch, we onboard them through tab banking, or if somebody, goes to our website and wishes to open a, online Insta account opening, that process is done through a video banking journey. We do understand the personal interaction, especially for this, customer segment, and therefore this hybrid model of video banking, where the video banker is the handholder who can help you conduct digital transactions with the comfort of personal interaction. I think this is the way we are taking care of enhancing customer experience, especially when they're at a time where they're nudged to go digital due to the pandemic. And lastly, I think the fourth D is about data. So, I think we have taken a very conscious shift from KYC to UYC. We just not only know our customers, we go beyond that and understand them. And, so banks are the golden source of customers' data. And I think we are very humble custodians of that. And, we use information from bureaus, their loan repayment histories, their saving account behaviors, and have extended them more than 6 lakhs pre-approved offers. So just to sort of sum it up, I'd like to say that, we believe that banking is a public good. And I think the genesis of private banking was to bring efficiency and accountability to public money. So our first and foremost purpose is to work with public with their best interests at our heart. And the larger goal is, of course, to empower India. And we at AU, strive every day to fulfill both of them. So thank you. And over to Debashish.
Well, it has been pretty exhaustive, and therefore, I'll keep it very brief. I think from our perspective, FIA contributes roughly to around, not roughly, but 7 out of 17 UN Sustainable Development Goals. And as an organization who have, been in existence for more than a decade now, we have served more than 9 million plus women, customers, and the amount of transfer that has happened during the COVID is in excess of $20 million. An average income for a CSP, or an agent income, is roughly around $1,972. But I'd like to, address this basis the response from the audience. I think I'd like to highlight 2 points, which, addresses the challenge that all of us face in various measures. I would like to focus on partnership and suitability. In our business, I think India is a very large country, and given its relatively low penetration of financial services and the high share of the informal sector in the economic activity, and a very skewed income distribution, it has neither been feasible nor desirable, to reach out to the entire country directly. And therefore, given that India has a very large informal, sector and a vibrant set of organizations like us and others who are represented in this panel today, and many more, I think it is a win-win for us to form partnerships. And the kind of network, for example, that we have, especially the banking correspondent entities in a country like India, still a long way to go, but I think a significant amount of progress has been made in this domain. So therefore, the partnership would be one key area to reach out to these customers. And when I talk about partnerships, I don't mean partnerships only from one dimension, but obviously technology plays a very, very important role there. Given the time constraint that we have, I won't elaborate on it, but there is a very, very strong evidence that the right partnership can really play a very, very important role in reducing poverty, one of the key goals in a country like India. The second one that I want to highlight is on suitability, and I spoke about consent, and it's a topic in itself. But one of the critical components of improving financial access is building trust and ensuring that the consumers benefit from the services that they receive. And unfortunately, most of the product designs are rigid, opaque, designed to meet the needs of the regulators, and are constrained by the legacy technological systems that they have to really make a difference on the ground. Things are changing, and I'm an optimist there. And there are a number of components that we need to look at from a suitability perspective. I spoke about consent. The second one would be risk mitigation, tools for risk management. And because if you don't, for example, a simple loan that needs to be paid out to a farmer who does not have a credit score or is credit invisible, how do you create a kind of a mechanism to lend to them? Okay, so therefore, among the various other things that we spoke about, I think there are two key dimensions that we really need to work on and improve. We have made significant progress is on partnerships, having the right kind of partners, and the suitability, which includes consent, which includes various degrees of customizations and innovations.
Thanks, Dev Shankar, and thanks, Sunanda, for your remarks. But actually, both of you actually did not address one part of my question, which was about how do you optimize or maintain the balance between delivering all of these, services to the customers, values, customer delight, and all of that, and also creating customer impact while kind of controlling your costs, because it costs to recruit and train your agent network. In case of, say, AU Small Finance Bank, of course, they manage their own network, so I think perhaps the dynamics may be a little bit different. And especially in case of BC networks, whether it is FIA or whether it is Pay Nearby kind of networks, you operate in very, very thin margins. And given those, how do you manage that? That was something that, if you would like to kind of come back and address, that will be helpful. Otherwise, Anand or Sunanda ji, Shweta can also add on their bit on this question. Thank you.
I can punctuate here. Now, sorry, Shweta, you want to say something first?
Go ahead, Anand. I'll follow up.
No, so I would want to tell this, that market determines price. Profit is determined by you, by keeping automations at scale. And that is how the 20 million transactions that 20 lakh transactions that every day we are able to put through, the large scale transactions, giving wafer thin margins, going towards automating the hell. And like I called out earlier, we run 120 core servers from which we are able to do automated transactions. By doing direct switches integrated in the banks, we are able to ensure that the transactions don't fail between us. We went further ahead to deploy our direct integration on MPLS with NPCI on the NPCI net. This helps you ensure that the customer interaction is totally in your bucket and there is no other place where the buck should stop or you are passing the buck. So a large scale where we say Har Dukaan Digital Pradhan, with a meaningful volume processed, with a lot of optimizations on cost, automations, helps you keep a wafer thin margin, which again needs to go back into plowing back into scale, and which is server technology. And part of it is also data-driven strategy. You know where to hit and go and serve. You know where from a bank branch lat long or an ATM lat long, 5 kilometers, there is no ATM. You go and serve there rather than trying to work on a place where there is already an ATM or there is a BC. So data science comes a lot handy with a team that we have deployed. Shweta, over to you, please.
So, okay, so I have many thoughts, Prabhat, but I'll also try to keep it short because I think some really good points have been made. So one, I think for us at Earth, this customer is almost like a wealth customer. So cost and experience is not mutually exclusive. I mean, you can give better experiences at high cost, you can give better experiences at low cost, and that is the job for companies like us to figure out. So I think the whole model to say that how you're going to give these wow experiences to even a micro customer is the job that we have at hand. And I think that's what we all are trying to figure out. And I think one example that came to my mind, and I think Deep was referring to it, and it really sort of associate, and this is exactly what we're trying to do, is partnerships. Even as a financing company to nano and micro entrepreneurs, as a team size of 50 people, we have done 3.5 lakh loans in 2.5 years. And with 50 people, if you are able to achieve that, I think scale is possible with experiences. And that's the model that we are working on. And partnerships are happening at 2 levels. One, where you have access to information which you can use to better understand your customer. And the second, partnerships are happening at a hyper local or a micro market level, where the trust establishment needs to happen. Like what Anand was also referring to earlier, that who is that person, individual who is at that last mile, who becomes the reference point, who becomes the lead generator, who is that go-to person. So I think partnership really is a core play as far as creating those experiences at a certain cost to meet your business model requirements at scale. And I think at Earth, that's exactly what we are trying to do. And the other important thing, which I feel starts becoming important, and I think I spoke about it in my earlier response as well, which is, if you want to deliver it, you have to break this into 2 parts. One is the sale part of it, and the other is the service part of it. Because the scale will only happen if you have continuous trust with those customers and with those partners. And again, this job resides with organizations and purpose-driven companies like us who work with this segment to say that, what is your sales process? What is your service process looking like? How are you completing this entire job? So I think this great topic, Prabhat, and I am a complete believer that cost and experience, good experiences can happen together. They're not mutually exclusive. And we as a company are really at the sort of really doing this. And we have the same nano micro enterprise that we're talking about. We have customers in Unnao. We have customers in remote Ayodhya. We are present in 18,000 pin codes with 50 people. So I think it's possible. We are not saying that we have solved it all, but we are trying to understand how do you build this sales and service mechanism to really deliver this value at scale with partnerships at 2 levels.
Prabhat, I would like to call out one project on which you are driving the viability of BC network. You yourself are leading that program, about how else to add more products on the same network. So once you have built a network and a platform, how easy it is to add. And I think Deb and Shweta are pointing out to the partnerships. How many more partnerships can you relay and publish on this network, so that the hard work done already can be benefited through a platform approach? And then you are like Meta. You keep adding APIs by APIs and keep publishing it into the far-reaching area. But simultaneously, like Shweta called out, keeping a trusted face in the front, well-educated, well-trained, well-oriented toward customer delight, be it at very thin margin.
So yeah, I kind of agree with that. It's a journey, and it is evolving. And it's very fascinating to look at it, or critically look at it from a distance. And when you see the transformation that has happened in the last few years, yes, the margins are low, so efficiency does play a very important role here. However, technology and reach, has made this game interesting, and through partnership, through suitability, building strong processes at the back, including risk mitigation strategies or algorithms, play a very, very important role as you expand in the further deep rural part of this country.
Thank you, Deb Shankar. Sunanda, do you want to make any point, or?
Yeah, since you asked,
Quickly, yes, thank you.
Yes. So just 2 things here. One is that, we thank the bank platform. Am I audible? Yeah. Okay, great. So on the bank platform, we're able to raise retail kind of deposits and then deploy it into markets. And the pricing of the, credit side or the loan side is actually the risk-based pricing. That is one point for that. And second point, I think, India is a wonderful country, and, we have a lot of opportunities to serve and work in terms of market, right? So like AU Bank has 30% of its touch point in unbanked area, which means like in the 5-kilometer radius, there's no other bank, right? And when we operate in places like this, when we hire the, probably the rural or the local talent and, serve them through them, I think this has kind of worked as a very sustainable model for us, keeping the cost bit in control and also able to successfully deliver a good customer experience. Yeah, thank you.
Thanks, Sunanda. So before moving to the next segment, again, we have a question for the audience. So Priyank, if you can pull up the next, poll for the audience. I'll read out the question here as Priyank pulls it up. So as the world gets used to the fintechs and digital platforms, connecting providers and users of products and services, what is the statement you most closely align with? Customers will be truly empowered as they can seamlessly access and switch between various products and services, or customers will be disempowered because fintechs and digital platforms will control access to various products and services. Third option is digital or fintech platform providers will be in the most dominant position as they are the ones who have access to the customers. And the fourth option is financial service providers, being the most trusted by the customers in the last mile, will effectively compete with digital and fintech platforms. So while we await the audience poll results, I would like you to kind of build upon this. And also, if you remember in our first question, I think 58% people had said that majority of people in next 10 years, banking will be defined by self-initiated digital platforms and digital ones. We have also come a long way in at least driving having access to bank accounts thanks to this PMJDY, 432 million bank accounts opened, and all of this, that data that we talked about. And yet we see, that the transition from having ownership of basic bank account towards a wider range of financial services, that progress is painfully slow in terms of access to insurance or credit or wealth management, pension, health insurance, etc. So, in your view, what are the most pressing barriers in adoption of these wider range of financial services that can actually lead from financial inclusion to really, helping, contribute to customer well-being, or what we also call as, financial health of the customers, right? So I think if you can, share some perspectives on this, and also perhaps if you want to include the element about, in last year and a half, we have seen how the impact of, COVID may have impacted the customers and the providers. I mean, I'm thinking more about the customer perspective. And in light of that, how, these wider range of financial services can be introduced so that, we not only have, savings customers, but, people using all of these different services that they can benefit from. I'll leave, this question to for all of you to respond. Perhaps whoever would like to go first, Dev Shankar, you're ready for this question? Perhaps after that, we can have Shweta and then Anandji and then Sunanda.
Sure. I think during the COVID times, the banking correspondent plays a very important role. Okay, part of essential services. The amount of the service that was provided to the people on the ground in deep rural when every single establishment was closed will go down in the history. Some of the work that has been done by this industry, especially during the COVID times, is well documented. I can talk on behalf of FIA. So during those times, all our network, we did write to the Ministry of Finance, and then subsequently requested all the banks to allow us to operate. It was a difficult decision because there were a lot of things that we had to put in place before we could run the business the way it was. We made some changes, but we were successful in getting things moving on the ground. We started with some very basic operations, okay, during those times, but the impact that it had on the ground for the people, I think is phenomenal, in one single word. I would like others to talk about it. There are some real stories that I'd like to share, but I understand that the time is a constraint. But it is very, very well documented, the role that the banking correspondent as an industry have played during COVID in ensuring that they can put food, okay, and buy some very basic necessities, including medicines, to survive.
We do have the results from the audience poll. So in fact, 62.5%, almost 2/3 of people believe that the last option, which is financial service providers being the most trusted by the customers in the last mile, will effectively compete with digital or fintech platforms. The first option, that customers will be truly empowered, has got 25% responses, and customers will be disempowered, 0%. And fintech or digital platform will be the most dominant in position, that's 12.5%. So that's the breakup of the results for you. Thank you. Shweta, you want to proceed with the response?
Yes. I think great to see the responses. I'm myself resonating with how the participants are polling. So, like Dave said, I think COVID was, an eye-opener for us. We were a very young company. We were just starting our life with our nano and micro enterprises, all raring to grow, and we were growing very fast. And we built our business during COVID. Let me just say that. How did we do it? And I think we were, while Dave and Anand were pushing the government business, we were there sort of financing the working capital of many of these small agents. So we were there for them. We were telling their stories to the big lenders, to the big institutions. We were talking to foundations. We were asking for soft money. Because I think what we realized at the end of the day, like what Dave was also referring to, essential category. If the essential category was not there, how will the basics work? How will the local communities work? And I think this is something that we really understood well, just even in the first wave of COVID. And we geared up. We in fact completely changed some of our credit products. We went from EDIs, EWIs, EMIs to bullet, and we gave complete flexibility to our customers to say that you decide how you think you're going to pay this. In fact, in the second wave, we also went ahead and we selected some of our repeat customers to give them interest-free credit. Just to give them this comfort to say that we believe in you and we think that this is a business opportunity and you're just having a slum like somebody like me who's running a startup, and you are no different. So here is an opportunity for you to continue doing business, and whenever you come back, we are going to help you with more. So I think what was very important was to ensure that whoever was associated with you as a customer, the engagement had to continue. And that understanding to say that we are there for you and we are part of the whole slum journey going up and down with COVID-1 and COVID-2. Incidentally, even last year when many of these customers were coming back was during October, November, which is a big season for nano and micro enterprises. Even this year, when they were coming back from COVID wave 2, was really the festive season. So credit had to play a very important role in the lives of these nano and micro enterprises. And we really saw this as an opportunity, as a challenge from an ecosystem point of view to say that while there are bigger institutions who have said wait and watch, this is our time because we are the kind of entities that these customers need. We are the purpose-driven entity. This is core to us. And we have to service this customer. So we kept the line going. And believe it or not, we have had better performances on our portfolio post-COVID because these were the customers who really felt responsible morally and otherwise to say that this company stood by me when I needed credit. So we have in fact had better performances on credit while some of the larger financial institutions were talking about that, our PARs have gone up, our NPAs have gone up. And I think what has also played an important role, Prabhat, is we kept our exposure in terms of how much that customer is willing to take a risk in the business much lower. That was very important, really understanding that don't become over-indebted. Don't take too much on. Take as much as you require to just survive, sustain, and cater to your basic needs. And we were actually customizing those loans for them. Is it 10,000? Is it 30,000? Is it 1 lakh? And really understanding those needs with those customers. So that's where I think we played a role as an organization from access to affordable credit during COVID. But just to quickly respond, Prabhat, on your earlier question, which says, what are the barriers? So if you ask me, and I sort of read that question that you had posted, and I really think this problem will start getting addressed as we have more purpose-driven and companies who are treating this micro customer as core. This customer cannot be one of the many things that institutions do. We need more and more organizations who are coming in to just address this customer's need, whether it is mutual funds, whether it is insurance, whether it is credit, whether it is savings, whether it is all of the above, or payments, which has perhaps been one of the most successful use cases. But we need more organizations who are treating this as a core. And I think the regulator and the ecosystem for years now have been experimenting. We saw the SFBs come up, the payments bank come up. We are seeing the digital bank hopefully, sort of coming up. And as we free up the space for more inventive companies to come up to cater to this segment as a core value proposition, you will see these barriers go away, because then there would not be mandated organizations who are trying to address this as one of the 100 things that they do, but really looking at this customer as my only customer. And that's where I think as an organization we feel, because for us, they are the only customer. And that's how we are innovating.
Thank you, Shweta. For the audience, I will say that, in the next segment, now we'll be having one more, poll for the audience, and do keep your questions ready for the panelists. Please share, that through the chat so that, we can then, engage with you to respond to your questions. Sunanda, why don't you go respond to the question that I asked. I did want to, add one more data point, which I saw, a few months ago in a newspaper, which showed that, due to this COVID, of course, the portfolios of, everybody, NBFCs, banks, MFIs took a hit. But one portfolio of gold loans really had a huge spike, 77% spike in gold loans. And the next day after that article came, there was a 2-page, ad about, one of the prominent gold lending companies kind of, selling the pledged golds, on which the people had defaulted, which was the really depressing part of that story. So I just thought, I'll share that anecdote. Sunanda.
Yes. So I think we believe that, the 0 to 1 part, like you asked, that the Jan Dhan Yojana was launched in 2015, and how are we seeing the performance of the accounts now, and what's sort of the outlook on that, right? So I think the 0 to 1 part of setting up that ecosystem has been done, and now I think it's just about a matter of time on how we go about this 1 to 100 journey. Because, when 7 years ago, I think 50% of India has had bank account. Now 80%, more than 80% of India has bank accounts. And out of those, I think 85% of those accounts are still active. It's only, I think 10% accounts, which has sort of no balance, or 15% accounts are dormant. So I think we are going at a very good pace. And I think we are just going to take our time in increasing the usage of these accounts. Of course, internally, like I mentioned earlier, we're doing a lot of things with the digital literacy counselors, and how with the unique financial literacy camps module to make our customers transact with us. But just seeing the overall horizon, I think we are going good, and we will get better. Thank you.
So Prabhat, before I forget, I'm sorry, if I could just say, the direct benefit transfer by the government, during COVID times, and the role that many organizations played, is something to be really be proud of. This was not possible if you did not have the network on the ground to do the disbursement, right? It made a difference between life and death.
Yeah. Thanks for that. So for the audience, we are now ready with. Yes.
I have to relay my response on this.
Yeah.
And I would like to tell you that we at Pay Nearby, we felt redeemed by doing this national duty during the lockdown. Like I said, सरकार ने तो पैसे खाते में दिए थे, हाथ में हमारे retailers ने दिए, digital प्रधान ने. The key was that during this time, we were able to bring in multitude of services like insurance, lending with a lending partner. We were able to relay various services, including powering an e-commerce company to reach out to the last mile and supply even medicine. So how you multiply came out naturally to people at this time. 2 kilo aloo, 1 kilo pyaj, 250 rupees cash dena bhaiya. Jab ye retailer dukaan par this conversation happened, people started asking for a football at a fertilizer shop. And which is what, with our partnership with the e-com partner, we were able to do that. I would want to touch on the trust aspect. 2 days ago, I was in Delhi at a retail counter around Gurgaon, and a poor customer, Sharafat Ali, naam bhi unka bahut acha tha, with 6 fingers on his right hand, he did Aadhaar, and his transaction failed for 10,000 rupees. And he had to debit his account and then send money to his family. I was standing at the counter, and I said, okay, no problem. I put my thumb there, 10,000 rupees debited to my account, and we remitted the money. In 30 minutes, that guy called up through my retailer and remitted the funds back to me, because by then his reversal had happened. And lo and behold, I meet my guru, my senior at airport, then after, Manish Khera. And he says, Anand, there is 50,000 rupee ke loan ke liye, these guys are trustworthy. 7,000 crore ke liye, people are not trustworthy. The people who run away really, the ones who are not trusted are these guys. And I said, what better an example to have just faced it firsthand. That said, you have asked about what are the barriers and why all other services are not picking up. Since I have been associated with this sector for a while, for the 4 key requirements of micro transaction, micro loan, micro insurance, micro saving, all this 3 will not happen unless the transactions would happen. And hence we first focused on the transactions. With the 2 million transactions a day, 6,000 crore a month, it brings a lot of flow in these dry accounts. Someone called out Jan Dhan accounts have been opened, 450 million. Total 750 million accounts are there, Prabhatji. 90% of the accounts are not active. Only 110 million users use UPI. The fact that their debit cards are not active or their mobile numbers are not integrated in the bank. The barriers, if we talk about really, while we have a tagline, we say Zid Aage Badhne Ki, and we hoot care for these barriers, and we have demonstrated it as well. But pay nearby, Zid Aage Badhne Ki is what we say. But since you called out, and since I know policy people are hearing this today at your forum, maybe it could help for mass people. The awareness and selection is a barrier where the customer is made responsible to be aware and select a product. I think it is our responsibility. We educated a lot from IIMs and IITs have to do that barrier breaking and make a siloed prescription. Literally, you here should take this. We should not get into educating him. H2O means water. प्यास लगी है, पानी पीजिए. बिटिया की शादी है, 5 साल बाद इतना पैसा हर महीने जमा करिए. Annual school fee है आपकी इतनी, हर महीने इतना पैसा बचाइए. It should be prescripted, right? That is one part I would say. Selection as a barrier. Second is accessibility and availability. Insurance, 16 crore bikes in country, 12 crore are uninsured because people don't know kahan milega, kaun dega. After taking the bike from a garage or a showroom, then after he forgets, Diwali to Diwali is not 12 months. Dashera to Dashera in India is not 12 months. When insurance expired, he does not know, and who will give me the insurance is not known. So that is the accessibility and availability barrier. How we solve, of course, is 17,622 postal codes, 6.5 lakh digital pradhan, touching lives of 15 crore citizens. The third barrier is the usability and technology and connectivity. We know the anecdotal examples where people climb on the tree in rural to get the data and make a phone call. We have solved for it by using SMS, encrypted SMS to transmit the data when the connectivity is not there. It takes a high resolve with 6 patent ownership, that I have in my banking and retailing services to continuously improvise, improve, innovate to reach out the last mile. I would rest my case at that, Prabhatji. Thank you so much.
Thank you so much. Very, very kind of, enlightening and informative kind of, inputs from all of you on this question. And I really like the point, Anandji, you make about ki for adoption of other services, pehle transaction hona padega, pehle account jo hamare paas transaction hona padega. So perhaps you're talking about some kind of a customer journey. And the second baat aapne boli ki it is our duty to, prescribe, what is right for you or what is the kind of product you should be choosing. And I'm in a little kind of, dilemma. Jaise Sunanda ji ne pehle bola, we look at data to kind of, let's say make, pre-approved offers for our customers. Dev Shankar Da is worried about consent part. You are saying, we have a responsibility to tell the customers what you should be doing next. So I see a little bit of,
all are congruent.
Contradiction nahi bolna chahiye.
All are
congruent. There is a little bit of, thoda sa hai conflict, on these different aspects.
All are congruent if you see. If we leave the choice to the customer to invest in mutual fund, there are 50 mutual fund houses with 500 schemes. Mm-hmm. If we are able to match it backed by data that look, people like you do this, people like you should do this, and taking a consent, the choice is available to take it or not to take it, but not to go and take a wrong product. To an old age person, selling an insurance is blasphemy, right? That is what we see it in the urban centers at some of the places where we have worked earlier, or know of friends doing it. So the right prescription is important. Of course, taking care of what Devda said, consent architecture is important, and an informed consent, not just a tick mark. Awareness with telling him that people like you who have similar age profile, similar income, similar family configuration. Look, Prabhatji, NAB, National Australia Bank in Australia has done this. PLU concept is not new. They bifurcate pin code wise, gender wise, education level, family configuration, income level, and then tell you that if you are in this profile, you know what, you should take so much insurance. People like you have taken so much, you are missing. Do you want it now? This is the data backed prescription with a consent. All of it is in alignment.
Thanks, Anandji. Dev Shankar, that takes care of your worry about consent.
It's a long way to go. Let me put it in this way. But I kind of agree with all the panelists, and it is, are we in an ideal state? The answer is no. Okay, it will evolve. Okay, and that makes the journey very interesting and exciting at the same time. We operate with various kind of constraints. So I spoke about suitability, right? Now, my basic premise of operating is that is a poor man very different than what I'm not calling myself a rich man, but he has the same kind of weaknesses. He has the same kind of, challenges that I have, maybe in, a different measure. So therefore, does it mean that I need to have different kind of products and he has requirement for very different kind of products? I think at a fundamental, at a core level, it is all similar. The way we create products today, mostly in India, we make it complex by design so that it is difficult for people to decipher and then choose the right one. Let me put it in this way. I don't want to go beyond that, but it's a very, very, debatable one. But there is a need to create products which are simple. The more the simple it is easier to understand, easier to explain, and therefore rest of the things will also fall into place.
Absolutely.
Thanks, Devashankar. So now we have the last, audience poll question. So audience, if you can get ready for the next question. Priyank, if you can display the question on the screens. The question is, given what you have heard from the different panelists, what is the most critical area for financial service providers to focus on in order to win the last mile customer? The options are A, better trained agents who provide high quality services. B, better product suite to meet customer needs. C, empower the customers through financial literacy and grievance redressal mechanism. And D, branding and marketing to build customer awareness and trust. Really appreciate, if you can, give us your opinion on this question. While we wait for the response from the audience on this, there are a few questions which have already come from the audience. There's one question directly for Sunanda ji. So Sunanda, the question for you from audience is, would pre-approved data-driven credit underwriting not miss out on the very basis that that is excluded from the financial service, as bottom of the pyramid beneficiaries have very less formal credit history? So how do you respond to that?
Yes. So like, I was telling that we have taken approach from KYC to UYC, that is understanding our customers, right? And when we understand our customers, we take a customized approach in servicing different kind of customers. So if we are, sort of servicing the bottom of the pyramid kind of people, we would actually do it on a touch and feel model. We'll go to them, talk to them, understand what they are, and we actually look beyond the documents, whether they have it, they don't have it. Then in some cases, we help them get access to those documents and include them in the formal sector. For example, in the PM Swanidhi Yojana, which is like a 10,000 rupees unsecured loan to street vendors, started in the COVID times because, those were one of the section of the society which was really badly affected, right? So when we started that kind of lending, we also gave them QR codes. And then on the basis of the transactions that they're doing, probably the further tranches of lending would be done to them. So that is one example of how the bottom of the pyramid beneficiaries can then be reached through, digital, and then going forward, how that data can be used in lending to them. I hope that answers the question. Thank you.
Thank you, Sunanda. We have a couple of more questions from audience. So I'll kind of read that out one by one. And also, for audience, please do keep your questions coming. We have kept some time for your audience questions because that's what is important, to have an engaging conversation. So the next question that I have from the audience is, with the increasing spread of tech-driven financial infrastructure, is the brick and mortar model of delivering financial services still relevant? And out of the three of you, probably Sunanda ji is the only one who represents brick and mortar, right? So maybe let's give an opportunity to Sunanda ji first, but then maybe if there's a counter view, anybody else can jump in.
Prabhat, BCs are all brick and mortar. What are we missing?
Brick, mortar, you know, झोपड़ी में वो बना के बैठा रहता है कपड़े के वो उसमें और बैंकिंग सर्विस ऑफर करता है.
चलिए ये भी नजरिया सही है आपका.
Yeah.
I think we think brick and mortar is going to be definitely complemented by the phygital model that we now sort of call it these days. So even if you walk into our branch, the account is open through a tab. You know, if we have recycler ATMs, we have digital literacy counselors, you know, telling them how to use that. And don't come, if they come to a cash counter, you know, we sort of gently take them there and tell them the next time you come, you can probably, you know, deposit the cash in this particular manner. But I mean, to respond to that question very specifically, I think yes, they would continue. And I think both the models will work hand in hand, at least for, you know, I mean, the near future. And till the most of the India is sort of digitized, but because money is about trust and, you know, trust is built on relationships. So even if we do like a digital model of video banking, like we're speaking over a laptop, you know, we still have a person behind the screen who helps them open a bank account or do a transaction, because we understand the value of, you know, these interactions and relationships.
Thank you, Sunandaji. Any other additional view or counter view?
Did your first opinion poll hit the death nail for this channel? Was it that what the people said? That
Yes, it was 0% in the last one. Yes.
बहुत sharp memory नहीं रहती है public की.
Yeah.
But yeah.
Right. एक और question audience आया हुआ है. Let me just pull out that question. So, have you come across any innovative distribution model of financial services which has cropped up specifically during pandemic to benefit the bottom of the pyramid beneficiaries? So you know, many of you talked about, you know, many things that have happened during last 18 months, but and they're talking about innovative distribution model of financial services.
I heard of it during pandemic, but it was in existence earlier. UTI distributing units of mutual fund in place of giving cash to the milk farmers. So when they pour milk at a chilling center, they would give them units of mutual fund. That was innovative, but it is being attempted for a while now. It's a brilliant thought.
Mm-hmm. Right. We do have the response from the last poll that we conducted with the audience, you know, about the most critical areas for financial service providers to focus on in order to win the last mile customer. And the third option is the winning one with 70% response, which is empower the customer through financial literacy and grievance redressal. That gets 70% votes. 11.76% votes go to better trained agents who provide high quality services. 11% votes go to branding and marketing to build customer awareness and trust. And 5.8% goes to broader product suite to meet customer needs. So overwhelming majority, I think, believe that, you know, customer empowerment through financial literacy and grievance redressal is the most critical. Any comment on that? And there are, I think, two more questions that has come from audience. So any comment on this poll results?
No, this is absolutely delight to know that customer care, the customer happiness officer that Shraddha called out, that has a role to play.
Right. So now there is a more specific question from the audience, which asks, what steps are institutions taking to educate and empower the end clients? Who will pay for this? Anyone to take that question?
No, can you please say that again? I think.
What steps are institutions taking to educate and empower the end clients? And who will pay for this?
So I'd like to, you know, just share my views. I think, you know, in most of these questions that are being posed today, there are no definitive answers. Let's also understand that there is no right or wrong, and there are perspectives which needs to be appreciated and which needs to be accepted as we move forward. situations, it evolves over a period of time. So when I hear Mr. Bajaj speaking about, suggesting something, it has merit. It definitely has merit. It is not meant maybe for the entire segment that we are looking at, but there is a segment which requires that kind of an advice that is given to them, which makes it much more easier and simple for them to decide. But to come back to the point so there are structured onboarding process both for the intermediaries, okay, and for the agents, okay, the frontliners, and this has evolved over a period of time. Okay, we have made it more robust. There are more compliances that we have to, adhere to as we have, undertaken the journey over the years. But the beauty of one of the ways to measure it is your ability, the number of incidences, compliance related incidences that happens in the network, one, and secondly, whether you have been able to mitigate some of those, or whether you have been able to probably, take corrective actions well ahead in time. So the point is that it is a responsibility both for the manufacturer as well as the distributor, okay, to invest in this very, very critical initiative. It's a shared responsibility, but predominantly as an intermediary, I think I cannot absolve myself from the responsibility of ensuring that we need to conduct ourselves the way it has been designed, the way it is construed to be compliant, and which is considered to be fair. Okay, so it's a journey over a period of time, and we are happy to partner with some of the institutions, both not only from the manufacturer but beyond, who provide this kind of support or guidance or structured interventions for the entire network.
So if I may just add to what, sorry, Prabhat,
just make a quick one, because now we are kind of we have just a few minutes left, and there's a couple of more audience questions that I would like to go through. Thank you.
Right. No, I was just going to say that, just to sort of oversimplify what Dave was also referring to, I would say that the companies who are responsible to make revenues and money out of the product and service they're offering to the customer are eventually responsible for the client information and client protection. So this aspect has to be clearly built in the model. If there is a cost X and Y, this has to be built in. Over and above that, if there are institutions who want to come in with soft money to supplement this process, of course, they're more than welcome. But this is part of the product and service and the solutioning part. So client information, client protection is not outside of the model that we run as organizations. So we as an organization are very clear. This is our responsibility, and we need to spend the money where it is needed.
Thank you, Shweta. There are two more questions, actually three more questions, but I'll take only two of them and have a quick response from you. So one question is, how are fintechs and small finance banks ensuring that low-income women clients are not sidelined as a result of digitization, simply because they are harder to reach? So anyone would like to respond to this question?
From fintech perspective, Prabhatji, we work with self-help groups, and UP government is the best example, where we created 10,000 BC Sakhi. Amongst other 4 banks, we are the only non-bank sitting there and building up this whole grassroots. We say that women are the GDP reserve of the nation. Shweta, मारिएगा मत मुझे, मैं आप लोगों के सामने बोल रहा हूँ, but those reservoirs of GDP reserve are being unleashed by various government programs. So we do get an opportunity as fintech to reach out. They're not very hard to reach. They're well meant, they're well poised and well reached, and they are having access to right customer segment whom they can cater to. They're well respected in the society. So who better a financial leverage provider could a woman be? So we certainly, as fintech, we do massive work. A bank can speak for.
Right. A final question from audience. Actually, there's 2 more, but I'll just take one. How financial literacy can be strengthened in rural areas? Anyone to respond to that question?
Sure, I think I can take that one. Because, as a bank, it is our duty And, as customers, it's their right to know about financial literacy. And I think here the regulator, RBI, has done a phenomenal job of the information that they've made publicly available, of the financial literacy weeks that, sort of they hold every year, and of the monthly interactions that we have, especially in all the rural and unbanked locations. Sort of we go and, like I had mentioned earlier, have a very interesting format of, connecting with them over an infotainment, over a Nukkad Natak, and telling them about the banking services. And not only that, then connecting them with the nearest BC or the bank branch for them to then avail the services. So I think, we believe that empowering the customer through knowledge, and we do understand that handholding is required, and letting them know that what is the right one for you and how to go about it, like probably Anandji mentioned earlier in the call. So that is also one way, but also sort of sitting with them and partnering with them in this journey is something also that we do. I think, and there are a lot of other innovative Sorry.
Thanks, Sunanda. Shweta, you want to say something? Just very
Points
end the session
yeah, very quickly. I think one is clearly localize. It has to be as local as per the state. And I think financial literacy does start working if you are able to personalize and localize. And second is over communicate. And this is something that we have seen work for us. We don't assume that once a financial literacy workshop done is dusted. Over communication to the customers and sort of monitoring the irritation index of even these customers is very important. And this is something that we are trying to run across SMS, OBTR, WhatsApp, all the channels, and really start understanding that where is the channel efficiency coming from. I think two things: over communication, really personalized and localized. Is I think the financial literacy can be improved and information can be better accessed.
Thanks, Shweta. Really like your very pointed two points. We have kind of reached at the end of our allocated time, and I would not like to kind of delay it so that other sessions don't get delayed. It's been wonderful to have this interactive session with all four of you. So much to learn, and actually that makes me so hopeful about what is happening. What we have seen happen on the ground in the last 18 months is of course an eye-opener. But this emphasis that I heard on things like partnerships, for the right partnerships, right products, emphasis on things like usability, accessibility, availability, connectivity, and the 4 Ds that Sunandaji talked about, delight, distribution. So, all of this, put together, I think, really makes me very hopeful that we are looking at, all aspects of, empowering the customer, not just selling a product, and making it as convenient for the customers to access, not trying to, not leaving anyone behind, so that, we have something or the other, planned for everyone, making it, as Anandji keeps on, saying, about, can you make it as simple as, buying 2 kilo aloo, 1 kilo pyaj or 250 rupee cashback. So I think that's, once we have achieved that, के साथ में एक motorcycle का insurance भी, क्योंकि बहुत सारे motorcycles जो हैं uninsured road पे घूम रहे हैं, and other such products. I think that's when we can truly see financial inclusion happen at the last mile, and of course all the delivery channel partners in this, the combination of the financial service providers, the fintechs, and the last mile connectors, the BC networks, and all these kirana shops who are kind of providing this that service, whether under brick and mortar or without brick and mortar. I think it's truly valuable. I really thank all of you for your valuable contributions, and thank Access for having organized this very important session. So with that, we would like to close the session. Priyank, over to you.
Thank you very much, panelists, for such a thought-provoking discussion, and to Prabhatji for a very effective and deft moderation. Also, a very special thank you to all the audience who have so enthusiastically participated in the polls and given us so many important questions to be asked. So with this, we'll wrap up this session, and we'll meet around at 6 for special plenary on making finance work for women in this hall only at 6:20. Thank you, everyone. Thank you, sir.
Thank you so much.
क्या है जो आता हुआ अच्छा लगता है लेकिन जाता हुआ नहीं?
एक और हिंट, ये चीज जाती है हर महीने पर आती है 3 महीने में एक बार।
ब्याज, इंटरेस्ट।
लोन पे तो इंटरेस्ट बैंक हर महीने लेते हैं,
लेकिन सेविंग्स अकाउंट में इंटरेस्ट देते हैं 3 महीने में एक बार।
ऐसा क्यों?
एयू बैंक के सेविंग्स अकाउंट में इंटरेस्ट मिलता है हर महीने,
मतलब साल में 12 बार।
एयू बैंक, बदलाव हमसे है।
Presenting 2 new tech initiatives in the retail microfinance sector. Sahyog 2.0 app to ensure data security and efficient services with newly added features like eKYC, geo-tagging and instant credit verification. And cashless payments of EMI via any bank UPI for easy and safe transactions. All this with an aim to enhance last mile efficiency and delivery for the microfinance entrepreneurs.
जिंदगी के कई मौसम अनुभव किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे, बिल्कुल इस पेड़ की तरह।